Welcome to the AICPA Town Hall Series, your resource for the latest news and updates on pressing issues facing the accounting profession.
Good afternoon and welcome to the AICPA Town Hall. I'm Eric Ausgerson, one of your hosts for today, and I'm thrilled to be with Mark Koziol, the CEO of the AICPA, live here in New York. So Mark, there's a lot of stress right now with the government shutdown. I know you're talking to a lot of members. We're going to be bringing Mark Peterson up in a second, but you and I, we reflect back on, the government, not the government, the business shutdown during the pandemic, a lot of anxiety, and we learned a lot of lessons then on how to, work through these difficult times.
And I think it just highlights how important these town halls are. In fact, I've gotten a couple of emails from members in the last 48 hours asking about, what's AICPA's position on this, what's happening with the government, the IRS. And I said, tune in Thursday. We're going to have as much as we know at that point in time. So I do think it's critical for us to have this conversation and for us to provide as much support as we can. And the big thing is, I keep telling members, you know what, there's going to be a lot of headlines. Headlines sell subscriptions. What we have to do is navigate between the truth and myth that's out there, and hopefully we can help navigate that, and hopefully we have a way to keep our members in tune on a regular basis.
Well, Mark, I'm really looking forward to today's town hall. We've got we're going to cover the government shutdown. Mark Peterson's going to be joining us in a minute. But I'm looking forward to the feedback from the town hall community to really get the pulse of how they're seeing this issue. So what we're going to be doing today is we're going to open up with Mark Peterson, the DC update. Then Lisa Simpson is going to provide a technical update. And following that, we're going to have a great discussion related to digital assets in the state of crypto. We had the blockchain symposium this week, Mark, here in our New York office. And then we'll close with the open forum and closing remarks. So with that, here's the agenda that I just reviewed. Let's bring Mark Peterson up in our DC studio. Mark, great to see us. You can see the New York backdrop here, and we see the DC backdrop in your studio.
Yep. No, we're here. Eric, we've been on a lot of town halls where we've talked about the potential of a government shutdown, and then it ended up not happening, even though we discussed being prepared for it. Now here we are. And so we do have a lot to share.
Well, Mark, you said in the last town hall the government was still open, and you said it was more likely than not that this was going to happen. So let's take the town hall community through what is happening.
Yeah, he's 2 for 2 on the year, by the way. He said one bill, he got that in July, and now he said this shutdown is going to happen. 2 for 2, Mark.
I know. I wish I was wrong on this one, Mark.
Yeah.
So let me just set the table because it's going to make a difference about how we potentially pull out of this. So again, regular order for getting the government funding is the House passes 12 appropriations bills, the Senate passes 12. They reconcile the differences between those bills. The agencies get funded, and that all happens right before October 1. Recent history, though, they just haven't been able to get that done. So that's why we've come close to these shutdowns, over the last 6-8 years. They may get several of the bills done, but they'll have to do some funding mechanism for what is remaining unfunded, either through a continuing resolution for a period of time, which is a current level funding for what isn't appropriated, or they package together a big appropriations bill in what they call the omnibus. Well, what happened is they don't have the work done. They've got about 3 of the 12 bills done. In order to get regular appropriations done. We got to the end of the fiscal year, and there were 2 alternatives that were put out. One was just a clean extension. That was the Republican offer. We're going to do a clean extension until October 21st. Doesn't solve the problem. It just buys us some more time to get those appropriations done. The House actually voted on that in September before, and then left town. Because basically they said the House has passed this. It was a partisan vote, one Democrat crossing over to the Republicans, and sent it to the Senate, and then they went home for the congressional work period, basically saying now the Senate has to deal with this. Well, the Senate requires 60 votes. The Republicans don't have 60 votes, so it has to be a bipartisan package. The Senate since then has 7 times, potentially one more than that, have tried to pass that clean extension to buy more time in order to get those bills done. They have not gotten the votes to do that. They have picked up several Democrat senators, Fetterman, Mastos has crossed over in order to, several other senators have crossed over for that clean extension because of the pain caused by a shutdown. However, they don't have enough. Now, their alternative, which the Democrats are arguing, is that they want a package to go along with an extension. Now, their extension, again, only gets you until Halloween, or excuse me, November 31st. And so basically what they want is $1 trillion package to go with it. So we'll keep it open, but the current offer was $1 trillion to backfill Medicaid reforms that came from the HR 1 OBB. They want to put funding back into PBS. They want, and this is probably important, of the most important thing because it's where the negotiations are probably going to end up, permanency to the tax credits for ACA, Obamacare tax credits, okay, the premiums. So permanent. That's, again, a significant package. One other thing was to prohibit the ability for the Republicans to come back and do a rescissions bill, which mean to impound or withhold funding that had been authorized by Congress. So the Republicans have said no to that. Now, during this period of time of shutdown, there have been several Republicans in the Senate that said, well, what about a shorter term extension of those tax credits? Not permanent, but a period of time. So far, the Democrats have not bit on that offer. They're still insisting on permanent. That's the political stakes that they're making in the negotiations. Both sides today feel like they're on the right political ground, which leads me to believe that we're probably going to be in the shutdown through next week. Now, we do have some big dates that are coming up. Obviously, October 15th is a big date for tax preparers with a deadline, but it's also when the military gets paid. And even though essential employees like the air traffic controllers and the military and our security and our border security, there are essentials, are still required to come to work, they'll start to miss those pay deadlines. So that is a huge inflection point on negotiations. And it's really when we've seen in previous shutdowns, the pressure increase on trying to get a deal. And, this is an example of prime political brinksmanship. I hate to say it, don't want to sound, skeptical, or cynicism, give you with some cynicism. But the reality is they're trying to assess what position to have to get the best outcome for the best deal for where they think they are, whether it's the Republicans or the Democrats, which puts you in kind of this shutdown, which we could see last for a little while. Now, there's a couple things that could happen that could get us out of this. One would be, again, I mentioned permanent on the ACA fix related to those tax credits. There could be a negotiation where something was put on the table for a period of time that would buy enough votes from Democrats who would see it hard to pass up. Republicans would have to agree to putting that on the Senate floor. Ultimately, House Republicans would have to agree too. They could say, we're really close to a breakthrough. We're very close to a breakthrough in negotiations. So what we're going to do is we're going to do another short-term extension for a week or two in order to work through those negotiations. That would open up the government for a period of time. So there are ways that we could kind of get our way out of this, but honestly, it's kind of day to day. The House is supposed to be back. They've been out since they voted on their legislation for the short-term extension. They've been out. They're going to be coming back next week. The Senate has been working through things, and again, in the middle of these discussions, and they have been bringing up votes to keep the government open, but they don't have a 60-vote majority on either side.
Well, Mark, a lot of questions are coming in. I know we've got this side poll. We've already had over, I think, close to 2,000 people take it. You might.
Absolutely. Well, and we're going to talk about the agencies, and it's tough not to focus on the IRS, but other agencies are impacted, and the profession who works with those agencies or compliance requirements are impacted. Government contractors, work stops on contracts, and oftentimes the payments stop as well. And now there's one of the other complicating factors, which you've probably read about, Mark and Eric, is there's some discussion about, will there be previously for furloughed federal employees, there had been back pay. There's questions about whether that will happen. I think there's a general consensus that it will happen. but it kind of adds some drama to the stakes of the negotiation. I mentioned air traffic controllers. That's always a big one. But there's other programs, nutrition programs, WIC, women, infants, and children. They start to feel the pinch, and there's discussions about, is there a way to deal with them, or the military pay is another big one.
And Mark, so you mentioned military pay. Military pay is 10-15. Civilian pay is 10-10.
Right.
That's only a day away. That is the air traffic controllers. I believe that's also TSA.
Yep.
So, there's been some news press out there about air traffic controllers already calling in sick and the like. So you see that on that side. But I think for us, looking at the profession and the agencies that were most affected by it, it's good to get that update as best we can right now.
Right, and we had prior to the shutdown, we talked about this, Mark, last town hall, where we had been in ongoing discussions, still are, with the IRS about what's the contingency plan. What is their plan for should there be a shutdown? We've got an upcoming deadline. We also have to get ready for the next filing season and implementation of HR 1. So that's an awful lot of work in the tax community, right? And so they did put out a contingency plan that basically they had 5 days of funding to work through it, where they were going to be able to keep prepare for the filing season, for next year's filing season, continue their modernization efforts, continue implementation of HR 1. That time ran out. They have announced furloughs of close to half. We're going to talk about this, about some of the suggestions we have, but close to half of the IRS. Again, we're in constant discussion with them about, we understand they have to do what they need to do during a shutdown, but we also have to figure out for taxpayers and preparers that are dealing with this, how do you deal with those services?
Great.
So, Mark, you want to talk about some of the AICPA advocacy efforts and Mark Kozel, even some of the input that's coming in from the membership?
Absolutely. So we called for them to keep all employees 100%, make them all essential, right? Keep everybody there, keep everybody working. We know that they've announced furloughs. They have tried to give us some comfort that they're going to really focus on service, on the departments that they need in order to continue to process, to make sure that we can get through this filing season and be prepared for the next one. We appreciate they're working on us. They're working with us. We appreciate the fact that they, are focusing in those areas. It's still hard to believe that if you take 50% of the employees at an agency out of play, there isn't going to be an impact. We hope that it's minimal and they can focus on the absolute most clear and present issues. But we also have to be all prepared for the fact that we're going to feel an impact. One of the things that we've discussed and working with the Tax Executive Committee and the leadership at the Tax Executive Committee, and really playing off what Mark suggested from our experiences coming out of COVID and PPP, are what are the things that we can practically recommend that they could do to provide some level of relief. And so we will be issuing a letter that will be going to the IRS that will be giving those suggestions. We'll be going to Secretary Bessent that will give them some suggestions of things like, provide targeted underpayment and late penalty relief, implement efficient, reasonable cause penalty waivers, discontinue compliance action and cease automatic collection activities, and obviously maintain online accounts and services. Those are things that don't require a statutory change, right? It does, in order to pay the military, they're going to have to do something legislatively. The IRS can make these changes and kind of treat this like we treated things during COVID and during some of those circumstances where the reality is we've got to shut down. We understand that. But how can you deal to provide some relief with some very acute issues that we know the profession and taxpayers are going to be dealing with?
And Mark, too, I mean, from our tax team, have we really heard any issues around IRS and getting things filed? Because there's been some focus. People are asking, well, you guys should focus on getting the deadline extended from 10/15. I mean, that's not realistic. We've talked about that. It's, for anyone, and if we were to poll our members here, about half would say extend it, about half would say don't extend it. As long as the IRS is doing what it needs to do, the systems still seem to be up and running. So, what is it that we are focused on, and what else can we do to make sure that we can get through this last filing date?
No, I mean, that's exactly right. We're going to be really, really interested in the feedback that we get through the kind of the open comments that are coming into the town hall right now. We're reaching out through the tax practitioners and the TEC and through the tax division. Obviously, we're hearing from firms. And what we want to do is translate that into real practical things that we can recommend the IRS can do to try and relieve some of this. It's not realistic to extend the due date. I think that's fairly obvious. And so what we want to do is just really, really focus on what the IRS can do with their current authority quickly that will provide some relief. Absolutely.
Well, Mark, I know we want to talk a little bit more about the overall impact to the federal agencies.
Yeah, I mean, it's not just the IRS, right? So, the SEC, underneath it, the PCAOB, the biggest issue with the agencies who are all going through some level, again, of furloughing is where they're going to focus. Now, if any agencies, what they're going to halt is putting out guidance. And so whether it's rules or guidance, those are the types of things that are going to be delayed or paused for some period of time. Interestingly, because the PCAOB on the public company audit side, it's funded through fees. So its funding is separate than appropriated funds that the SEC has to deal with. Now, if as far as the PCAOB pushing through rules or pushing through guidance that requires SEC approval, that will be paused because the SEC will have shut down that program. Now, on commerce and tariffs, and we're going to talk a little bit about tariffs in a minute here. There are certain programs that are shutting down, or they're at least pausing because they don't have the ability to move forward on them with the folks that they've furloughed. However, they are continuing to have the discussions related to tariffs, whether it is working on new deals or whether it is trying to consummate the deals that we have that are in play. So that kind of continues to move forward. So there still is levels of activity. It just is really depends on the agency that you're working with. Department of Labor is a big one. HUD is a big one. Labor is going to focus on enforcement issues. They've laid off furloughed about both HUD and Department of Labor about 70% of their workforce. So they're going to really go down to mandatory inspections. They're going to go down to mandatory grant issues related to housing of homeless as HUD. Pretty much everything else is going to be put on pause.
Well, I know there's a lot of resources being put together, and Mark, you even mentioned this in your opening here.
Yeah, so I think this is something that, and I really appreciate the AICPA team for how fast they were able to get this up and running, and hopefully it's not going to be up for long. That means the shutdown will be ended, but at a minimum, trying to give all of our members a central source to be able to go to and say, all right, what do I need to know? What is that sense of reality? I already mentioned before about there's going to be a lot of headlines, pluses, minuses, who's at fault, we're going to blame this one, they're going to blame that one, and we just wanted to have a central source to gain the information that hopefully you need. If there is something there that you don't see, I do think that reaching out to us, any one of us, to ask for some additional information, and that we can do the best we can, because we just want to support each and every one of you through this time to make sure that you're able to help your clients, you're able to help your businesses out there as we navigate what's happening.
Absolutely right. We'll do the best we can with the information we have.
Right.
And I mentioned tariffs. They're still plugging away at tariffs. Interestingly, there's been a little feedback related to the discussions with the EU, who are kind of negotiating the handshake that the administration had with the EU. The EU is complaining that there are additional demands, concessions that the U.S. is asking for. Interestingly, not around trade issues, but around regulatory issues. Corporate disclosures around climate is an example. Digital regulatory requirements are kind of being added to the discussion. The EU is pushing back on that, saying, their regulatory autonomy is a red line, and these discussions don't include that. So there is some cracks going on in that conversation, which is a significant deal from when you look at the breadth of all of our trading partners. Getting that deal done is a big one. The other thing that's going on, Mark and Eric, is the Supreme Court just started their next session, and on the docket, they're looking at several of the executive orders, the presidential power that was utilized in order to call for some of the reciprocatory tariffs, right? That's country to country. And the statutes that were utilized were really emergency authority. And there's questions whether that was constitutional or not. And so the Supreme Court will be kind of focusing on that. So there's going to be a lot up in the air as it relates to a lot of these country to country reciprocal negotiations that are occurring, and whether they were constitutional in the way that the statutes were used, whether it was appropriate to use the emergency authority or not. But on the other side, there's a lot of sector conversations going on related to specific industries and products, right, Mark?
Yeah, so that's something that I was just with my counterpart at CPA Canada just yesterday at a meeting, and we were talking about this because in Canada now we've just adopted, not Canadian specific, but a tariff on wood furniture and wood products that would be, I believe, Canada's #1 export is actually wood and wood-related products. So that is very specifically a Canadian tariff. However, it's going after the product base, which would be outside of what is in the current Supreme Court case.
That's right. And pharmaceuticals are another example, steel, auto, foreign-produced films, which actually kind of got in the service area. So far, it's been all products and not services. But that is a different inflection than what the court cases are being heard. So there's still going to be a lot going on. We're going to have a lot to talk about as it relates to tariff. And then I got one other update related to the IRS. So they just announced was a new CEO for the IRS. This role is brand new. They had not previously had it. Frank Bisignano is actually the commissioner of the Social Security Administration. And he has been tasked by Secretary Bessent to actually become the CEO of the IRS. This is welcome. I mean, right now, there's been a lot of transition in leadership at the IRS. Having, again, some leadership that can come in and try and help the IRS in a very stressed environment. Even prior to the shutdown, he's got a very interesting background, not only coming from Social Security Administration, but from First Data and JP Morgan, a lot of history with data, technology. There is some questions, though, about this role. We don't know exactly how this role is going to perform. It's new, and it's not Senate confirmed. And so there is some pushback, bipartisan pushback coming from the Senate of applauding the fact that there's a leader that's going over to the IRS, but also preferring that ultimately there is an IRS commissioner that is confirmed by the Senate Finance Committee. So, we'll see how this plays out. The administration has said they will eventually submit a commissioner. There have been roles that have been acting for long periods of time. But again, under duress, I think that the focus here on and with the background that this new CEO role is going to have, it could be very helpful.
Yeah, they called him on Wall Street Mr. Fix-It. So
that'd be great.
No. Well, Mark, we did have that. Do you want to give a little bit more background on that poll question that a lot of people have been responding to? Mark Peterson?
Yeah, I mean, basically, what we did is we wanted to ask you how you're being impacted. We've got probably the most specific examples coming as it relates to the IRS. But again, even if you're thinking about the IRS, open up the government is a great suggestion. But if there are specific things that we could do or suggest or recommend, we'd love that feedback. But also where you sit in your other interactions with government, right? So if your clients are dealing with grants that are going to get stalled, if you're a contractor and you're going to have issues, if you're working with Department of Labor or HUD, or any of the other agencies, really give us your feedback on those very specific pinch points. We all want the government open. We all want the agencies functioning. But should this be an extended period of time, we also want to be able to go to those agencies and give them, again, very specific, realistic recommendations of things they can do to try and relieve our pain points so that we can serve our clients and actually get the compliance that we're required to do done on behalf of the agencies and the government. So we're really looking forward to what's going to be coming back.
Well, Mark, that was a great segment. A couple hundred questions coming in related to all that you covered. We've already gotten, so in the upper left-hand side, that is where the question is. You just answer the question that Mark just reviewed. Real time here, we've got a few thousand answers. Top concerns, IRS operations communication, October 15th deadline, delayed funding, OMB, and then TSA and FFA. So that we'll be sorting through that, and it is very helpful. So just your comments coming in via the Q&A as well as that survey question, we greatly appreciate.
Very much.
All right, Mark, we're going to bring Lisa Simpson up right now. So Lisa, welcome. Great to see you coming from the Durham studio.
Yeah, I've got some FOMO not being in the New York studio with you guys, but I always love our Durham studio, so happy to be here. Really quickly, we are getting questions about where to find where you can input the information about the shutdown impacts for you. This is not your typical poll question that you see. This is static, and it's living in the left top corner of your screen. So you don't have to rush. There's not a time limit. Just get your answers in before the end of the show today, and we'll use your input to factor in where we need resources, what our advocacy efforts look like, et cetera. Mark Peterson, Mark Koziel, and Eric gave us a fantastic rundown on what's going on in DC. I'm going to hit you with another hot topic that we've talked about on several of our town halls recently, and that is the mandatory federal electronic payments. So there are two components to this, right? There is the payments to the Treasury and payments from the Treasury. So right now, payments to the Treasury can still be made by check for now. The executive order that was issued earlier this year asked that those be discontinued as soon as possible, but that date has not been set in stone. Now, let's talk about payments from the Treasury, because we've gotten a lot of concern about, let's say, refunds on tax refunds for folks who do not have the ability to get an electronic payment deposited. And for those, we've gotten an update very recently, late September, from an IRS director who said that basically the focus is on the 2026 filing season. A quick fact is that 93% of the refunds that were issued for the 2025 filing season to individuals were made electronically. 7% is our edge case, but 7% is a pretty big number when you're looking at the volume of refunds that are issued. So a lot of the concern about that relates to international taxpayers, elderly taxpayers who may not know how to set up their accounts so that they can get these refunds. So again, the IRS has indicated that they'll focus on 2026 filing season. If a return has been filed asking for a refund and there is no electronic payment information, then the IRS will send a letter to those individuals, and the focus right now is on individuals, to get that banking information. If the taxpayer, does not respond, the IRS, basically the IRS is going to hold for 6 weeks while they wait for the taxpayer to respond. After the 6 weeks, the IRS has indicated that they will go ahead and send that refund, but that is a pretty significant delay for a lot of us who are used to getting those payments fairly quickly. So for business taxpayers, what the IRS hopes to do is gather the bank account information from the tax returns. So similar to an individual return, they'll be asking for the bank account information. They're going to update the forms, and we'll see how that works. We've given you some resources, including links to the AICPA's kind of infographic that you can use to help your clients understand the change in process if they do not have that electronic refund set up. And then some FAQs from the Treasury and other resources. The FAQs, I took a quick glance, they look pretty helpful, so I would recommend that you take a look at those. And again, I know this is a hot button issue. AICPA is continuing to advocate for some parameters and for the ability for those who are kind of edge case scenarios to be able to navigate this new e-payment, whether it's a refund or a tax payment. Next hot button issue is a phishing scam. October is Cybersecurity Awareness Month, and one of the reminders of why we all need to think about that is this new phishing scam that we've learned about. And basically, tax preparers are getting a note that says returns filed under your EFIN are under review, and it asks you to click on a link. Don't click on that link. As a reminder, don't click on the link. So always make sure that you're keeping your cyber awareness up, and that you're reminding everyone on your team to do so as well. So lots of good tips for you here, and even an IRS email address that you can submit those suspected phishing scams to. We've got a little bit of a round robin on the IRS. So quickly we'll hit this. The P10 fee is dropping to $18.75 effective October 16. There's really quickly, the IRS is launching a 2-year pilot program for a mediation program around post appeals, wondering if that will be more attractive rather than continued litigation. And then I thought this was interesting and hopefully a little bit comforting to you, is that the IRS has released what they're focusing on in terms of priority guidance. Implementing HR 1 is top of the list, which is all good news. They're also looking at how to emphasize deregulation and burden reduction, tribal tax issues, digital assets, which we're going to talk about here a little bit more, and Secure 2.0. So a lot of hot topics there that I know we're looking for more guidance on. I mentioned digital assets and wanted to give you a heads up for you to start thinking about as you're talking with your tax clients, or if you are a tax client, be thinking about how you're going to start reporting in your digital asset basis information. So as a reminder, tax year 2025 reporting will not include the basis. So as a tax preparer or as a tax client, start working on that information now, because it could be time consuming. You don't want to rush it, because you want to make sure that you're using a consistent asset basis allocation method. So just a heads up to start working on that one. Speaking of digital assets, do you remember a few weeks ago when our buzzword was complicated? Well, this week it's digital assets. So this time I wanted to talk about some testimony that one of our rock star volunteers, Dr. Annette Nellen, gave before the Senate a few weeks ago. This was primarily educational, and just as an FYI, Dr. Nellen is the chair of our Digital Assets Tax Task Force. And she was educating the staff and the senators on some taxation implications for digital assets, asking them to consider treating them like some other types of assets. So we've given you a link to the commentary there, and just trying to keep that on your radar. This is going to continue to be such a hot topic as digital assets grow, and the taxation of those assets and the accounting and auditing and reporting of those assets continues to mature. I'll close with a reminder about our National Tax Conference. As you can tell, there is so much going on in the tax arena, and this is a great year to consider attending the National Tax Conference, either virtually or in person. And we have a new opportunity this year to ask a first-time attendee to join you at 50% off for an in-person conference. So just a quick reminder there. I wanted to go through this fairly quickly because we've got a good conversation and an interesting conversation coming up about those digital assets that I mentioned.
Okay, look at this. We've got a very full studio here. Lisa, thank you for the update. We wish you were here as well. And we're going to continue with digital assets. I guess your word of the town hall for this week. So let's get into it. We're going to welcome two guests here who've been on previous town halls. Ron Quaranta, who's been our partner for many, many years. He's a CEO and chairman of the Wall Street Blockchain Alliance. And we're going to be talking about a symposium we just held with Ron. And we have Amy Beers, who's a senior director of assurance and advisory information. And she oversees all things that are going on related to digital assets at the AICPA. So great to have you both.
Great to be here, Eric. Good to see you. Always great working with you and Amy. Mark, always a privilege.
Good to see you.
So, Mark, we've been holding, Mark Koza, this blockchain symposium now for 8 years.
Hard to believe.
It is. But you know what? We're gonna dig into digital assets. But I just want to step back and reflect on how we were viewing blockchain back in 2018. There's some similarities to some of the talk that's going around about Gen AI right now. You and I were sitting at conferences, and I remember sitting with a bunch of auditors, and some said, you know what, this is 2018. I'm glad that I'm retiring 2 years because blockchain is going to put the audit profession out of business. That hasn't happened. We're going to talk about the state of digital assets and blockchain, a lot of excitement. But it's interesting. What we do with these symposiums is try to demystify, what's going on. That's what we did in the early stages. But just maybe some of your reflections on kind of this journey.
I mean, for so many years, I've heard of all these things. I don't know what we did to society to have society say that we're going to be put out of business every time there's a new technology, but blockchain was right in there, right? So this goes all the way back to the advent of spreadsheets. I don't even want to say Excel, VisiCalc. I'll date myself on that, well before Excel. But blockchain, we were having those conversations, Ron, right? When we first met in 2017, 18, when blockchain was coming around, that it was going to replace what the auditor does. And yet here we are, and we have the Genius Act. So I'm excited for this update. I think it's really great for our members to get an update on what you're both hearing.
Thanks, Mark. So this is, we're posting some of this to social media. A lot of great discussions over this symposium. So what we're going to do is give you some of the highlights. And we're going to start things off, Ron, and you do a great job. We call this Crypto Year in Review. It's actually a 5-year look back. So one thing that just astounds me is that 65 million Americans own crypto.
Eric, it's so amazing when we do the research and we look at some of the data and realize a growing percentage of Americans use crypto in some way, shape, or form. Be it firms that have members and employees that want to be paid in crypto, be it through investments. And we're beginning to see it percolate through growing portions of the economy. Wall Street, hence my organization, really looks at how do banks treat clients and offer services, how do brokerage firms, how do retirement accounts. Retirement accounts today are spending an inordinate amount of time trying to understand how crypto can be part of the landscape for them. So again, 65 million people owning crypto. It's been a 180 since our last symposium, Eric. I think we're at a $4 trillion market cap, give or take. Bitcoin's price, we were joking about it at the symposium, it was about 122 or something. 126 yesterday, back down. So there's a certain amount of volatility.
And a big comeback from, we all reflect on when we had it was December of 2022, FTX, the collapse there, the fraud. And then you had a little bit of the crypto winter. And it went down to like 17,000, under 20,000.
Correct.
But look at this. It's going mainstream.
Yeah, and that's a reflection of a couple of important things that have happened stateside. One is certainly a lot's happened since January when, from a regulatory perspective, some things have been throttled back to understand what this means for the ecosystem. And certainly this growing interest. And one of the things we've often spoken about is the accounting profession being tied to understanding 861 million crypto users worldwide, crypto trading hundreds of billions of dollars every single day. So it really is an important part of how the ecosystem grows, how the economy grows, and inarguably how the accounting profession participates in that.
Well, clearly on this town hall, we've got roughly 13,000 people. We have a lot of people that are not involved.
Yeah.
In crypto or digital assets. But the two big buzzwords at the symposium really were around stable coins and this ETF movement.
Yeah, absolutely. And stablecoins are one of the premier products being brought forward in the marketplace, really, which are crypto tokens that are tied to underlying value, like U.S. Treasuries, for example, or the dollar, for example. And that means money for some of these large Wall Street giants. Goldman Sachs, PNY Mellon, BlackRock, Fidelity, all of these are offering now services. And it won't just be to high net worth individuals. It will be to their mass consumer base. We're also talking about the tokenization Bitcoin ETFs, and I want to raise one thing that Lisa raised a bit earlier around the tax implications for staking. I think it was today where a particular exchange traded product will make staking available, staking rewards available to their ETP holders. So again, the argument we've always put forward, aside from me arguing with my earpiece,
You don't need it, Ron. We're here in the studio. You can take it out.
is this idea that the accounting profession will become ever more important in how do we value this stuff? How do we report on this stuff? The other interesting aspect, if I could real quickly, Eric, is real-world asset tokenization. By mid-2025, we're looking at $27 billion. That's growing exponentially over time. So you will begin to see tokenization across not just Wall Street assets, but across real estate, across luxury items. There was a news item recently that luxury items being written to a blockchain and tokenized for sale, and it realizes a lot of efficiencies and it realizes a lot of operational minimization of expenses. So this institutional adoption is driving a lot of the conversation.
Well, and the regulatory landscape has changed. We've talked about this with Mark Peterson, but it's changed dramatically.
It has. It has. And when we look at the formation of the Digital Asset Working Group, what we've often said, Eric, is it is a non-partisan conversation when we talk about crypto. And there's a lot of stuff in the news about donations and the election. The important part is what's being developed. When we look at the pro-crypto executive orders, the reversal of SAB 121, which in my mind really made it difficult for quote-unquote legitimate or qualified custodians to participate in this space. Even things like the SEC Crypto Task Force. It is astounding how deeply involved the SEC and other regulators were in trying to evolve the industry, protect investors, address their mandate, but allow innovation to thrive in the ecosystem. And then finally, some of the regulatory certainty. We've got a lot to do, and I know, Amy, you're going to be touching on Genius. We still have a market structure bill that's a bit up in the air. But really, this is the maturation of a market. Eric, you and I have been talking about since 2017.
Yeah. Well, yes, and one thing I want to note, we've had a partnership with the Wall Street Blockchain Alliance for the past 9 years. But Amy, everybody, we had all kinds of firms in attendance here. Also technology companies, everyone's very impressed with the AICPA's leadership around how you do the accounting and the treatment of these digital assets.
Right, and so we've been involved in this since the beginning of starting with the Blockchain Symposium, and from that initial symposium we got a lot of feedback and a lot of questions from our members about how do I account for this stuff, what does it mean in my financial statement, audits, even some tax. So we kicked off and formed this Digital Asset Working Group in response to those questions. And so we have formed this group of our members. They represent experts across the firms and lots of different size firms, big four down to some of the smaller firms who are really dealing on the ground with some of these issues. And we have developed this guidance, and it's the Digital Asset Practice Aid. And it is a live document. It's a member-only benefit for our members to go to our website, download a copy of it. We keep it updated. So we have done a number of updates over the years. This year we did 2 updates. And the Practice Aid is sectioned off between accounting topics and audit topics. From the accounting standpoint, we've got 8 chapters covering accounting of different topics, 28 different Q&As. And this year in January, we updated the document for the new FASB ASU, the accounting standards update that was related to crypto and tangible assets. And with that, we updated the entire accounting section for this new FASB ASU, as well as adding some new Q&As related to which digital assets would be in scope of that FASB ASU. Now, on the auditing side, similarly, we also have 7 chapters dealing with different auditing topics. We start with client acceptance. Client acceptance is really the most important aspect of whether you get into this space or not, right? What are some of the things that you need to understand? It's really a unique space. You need to have some special skills and knowledge in dealing with digital assets and dealing with the technology. And so does management of your client. So, what is their overall strategy and why are they in the digital asset space? This past month, we actually updated the Practice 8 again for the auditing side. We added Chapter 7, which is on crypto lending and borrowing. And we talked about this in the symposium, given some of the stats, Ron, that you just brought up in terms of the growth and the value of these crypto assets. There are holders out there who have these high value assets. And rather than selling them and taking the capital gains, they might want to lend and, take the interest or use them as collateral for borrowing. And so how do you account for that? And then how are these transactions being handled by the auditor? And we provide a table of example procedures that auditors should consider as they go through this. So next, I also want to talk about our attestation subgroup. And this is where the Genius Act comes in. Attestation is an assurance engagement that covers information that's outside of the traditional financial statement audit. And auditors use the AICPA attestation standards for these engagements rather than the audit standards. And so the stablecoin information is actually outside of that process. And so this image, I've presented it a couple of times, but this image represents a trusted ecosystem for stablecoins, what we think as a trusted ecosystem, with the roof being, laws and regulations that oversee the whole ecosystem. And we now have the Genius Act. And that was really groundbreaking, right? I mean, the first federal law covering crypto assets. And so that not only requires that stablecoin issuers do have one-to-one backing on these coins, it also has a reporting requirement on a monthly basis, as well as an attestation service that needs to get provided by a CPA on a monthly basis for these reports. And so looking at the foundation, you really need a good framework for reporting this information. And so we have issued the 2025 criteria for stablecoin reporting, provides a benchmark for reporting under this act, and it is available on our website. And now the pillars. Those are where the CPA come in, right? We support this whole ecosystem by providing assurance services over these reports that are going out to the public and providing that transparency and the public interest. And so we are working on technical Q&As for practitioners who perform engagements in this area. So on the next slide.
And just we've got a number of questions coming in, but I'm just going to take a question. I have a question here on stablecoin. I mean, this is a huge emerging field. There's how many? There's 1,000 stablecoins.
I think there are 1,000.
Right now, there's too many.
Yeah.
There's too many. But when you talk to the technology leaders, you talk to the banks, you talk to the financial professionals, this is going to be a different wiring of how some of finance transactions are carried out.
Right, and if we go back to the original reason for stablecoins, it was to remove the volatility of crypto, and then it became rapidly the new rails for things like payments potentially, or how Wall Street settles transactions, for example. And take it one step further, Eric, and you and I talked about this at the symposium, when you have companies that are going to be issuing their own stablecoins, how are they going to do that? What's the value proposition for that?
Right, and so it's a lot of this will be a niche category. And I think we probably are going to be evolving this. We're thinking about this, having a digital assets, crypto conference, because there's just so much depth. The other question that's been coming in is just a little bit of a briefer on what is tokenization.
Right, and that's probably its own session.
That's its own session, right.
Tokenization is the ability to take some asset and have it legally represented within a token that's based on a blockchain network. Right. So we've talked about tokenization. Essentially, stablecoins are a tokenization of an underlying asset. We've looked at real-world asset tokenization. There's conversations about real estate and the luxury items I mentioned. And Ron might be able to tokenize his house one day and sell pieces of it. Again, some of the future thinking of it, but that's the fundamental premise of a token.
Right, and it's also even like with maybe doing things that makes titling simpler. So there's all kinds of things that are occurring here.
That's right.
Amy, back to you. There's questions on getting access to the practice aid.
Yes, and so the slides have direct links directly
Okay.
to the practice aid, directly to our Stablecoin Resource Center. On the Resource Center, this is a direct link to our summary that we prepared on the Genius Act. It's a handy 2-page document you can download right on our website, giving some of the highlights of the Genius Act. And lastly, I wanted to just talk about the tax side. Lisa had mentioned some of the things that are happening in the tax area related to the IRS guidance. And quite frankly, there's not enough guidance out there. And so our tax working group is developing a practice aid similar to our accounting and auditing practice aid. And they're going to be dealing with, some basic concepts that you can, tax practitioners can go to their clients with specific questions about their involvement with digital assets. We'll summarize some of the IRS guidance and provide some best practices for some of the reconciliations that may be needed between those 1099 DAs and the Form 8949. So this practice aid will be released right before the tax conference that's coming up next month.
Well, Amy, thank you. Just great leadership here on advancing all of this for the AICPA and the membership. And Ron, thanks for your partnership. You're gonna stay with us as we move here into open forum. We got hundreds of questions here. Lisa, you've been looking at them. There's one that I noticed during Mark Peterson's session that I'll start things off with, and then please jump in, and Mark Koziel as well. Mark, questions about Mark, you might want to take this one. The SEC, public company reporting. The statement of it potentially not being required quarterly.
Yeah, so, and it was interesting. I was with the SEC literally the day after that was first sent out in a Truth Social post that was happening. And so the conversation was there. It's not new. This conversation did bubble up during the first Trump administration back in like 2017. It was being talked about. So the question is, how does this relate to businesses? For the largest of companies, the big four, maybe not so much because they very much are in there kind of quarterly anyway. But is it going to relieve some of the burden on the smaller listed companies that are out there? And really the big thing is, and I think this is part of the understanding, is remove the regulation, because some industries may make sense for quarterly reporting. Other industries, it may not make sense for quarterly reporting. So by removing the mandate, let the market decide on which way is best to go, on when the filing and what the investors are looking for. And so that's really the theory behind it. Mark, anything to add?
No, absolutely right. I mean, they've been heading this direction in Europe for even longer. And again, to your point, certain sectors, certain industries, utilize it because they think that it's helpful. Others have moved away from it, and it's definitely right in the sweet spot of the agenda of this SEC and this administration to try and help companies get into the public markets and reduce boundaries and help with competition.
Great. So Lisa, and as you said, market forces could be.
Eric, I need to issue a retraction and correct one of my statements. Annette Nellen, my rock star, is still a rock star, but she's not a doctor. She has her bachelor's, 2 masters, her JD. She's an academic and an author. So apologies for my misstatement, but still a rock star in my book.
And any other questions that you may want to raise to the group here?
We still get continued questions about the e-payments. A lot of questions around trust continue to come in. So we'll take those all back to the group and continue to work on our advocacy efforts to get clarity and, reasonable accommodations for some of those taxpayers.
Absolutely.
The other piece, just looking over your shoulder here on
I
your
know
computer,
you see the questions.
I have seen a few of them, and I will say that some of what's coming in the theme around, the government shutdown was that the OMB compliance supplement hasn't been issued. It's already late, and what are the effects of that even now? We have June 30 year ends that need to happen, so that's definitely something I'm taking back to the team to have further discussions on. Obviously, we're not going to get it, I would say, more than likely during the shutdown, but for us immediately after the shutdown to be focused on having those conversations, saying we need some information and let's get moving on it.
Yeah, but they've been pushing for that for a while, so it's definitely on the radar.
Well, I think this has been it's been a great town hall, Mark. I think just stepping back, a lot of questions coming in, but we'll be staying close to any announcements that come out of DC. We do have our communication channels with the newsletter. We'll give we issue the town hall newsletter on Tuesday, so we'll make sure we've got current updates coming out through that medium.
Yep, and hopefully, everyone will see it if they're not already taking a snapshot of the shutdown resource center we have on our website. By all means, continue to check in on that. Make sure that you're staying up to date on things. Trying to stay away from the headlines and more so focusing on what we know or what's going to impact the profession. And that's always our number one concern. Everyone around this table and online. Is making sure that the profession can serve their clients, their businesses as we go forward, and we'll keep up to date on that.
And we'll be out in the marketplace a lot. You've got the AICPA council meetings coming up later this month. Lisa mentioned the National Tax Conference, and then we're closing the year out with Digital CPA. So, Mark Peterson, thank you very much.
You bet.
Ron and Amy, thank you. Amy and I, Lisa and I will take the town hall community through some resources here. One resource that we've been highlighting is this new AI tax research tool partnership with Blue Jay. What we're trying to do is put together just some basic materials to help practitioners better understand what AI-powered tax research can deliver. We're thinking about how firms can package this, can bill differently for it. One way we do this is we do case studies, and we've got success stories, also just demos. So Lisa, Mark, I know you're talking to firms about this evolving capability for their tax practice.
The Blue Jay gave me a little trial. I just thought of I just happened after the RevProc August 28th on Section 174. I just did a little study on it and even shared it with the team, and the team was working on our resources just to see how fast and how accurate it is, and so it was pretty amazing to see the power that's there, and I hope that our members are really taking advantage of that relationship. They get a discount as an AICPA member, but more so how to be that true trusted advisor and getting paid for it from the client based on that powerful information that's there.
And the key thing about all these technologies is the evolving of the workflow, your practice strategies, your client, packaging of these offerings. So it's the technology plus. So I already mentioned this. We've got Digital CPA coming up at the end of the year. We'll be in the basic DC area, hosting it at the Gaylord right outside of DC. We've also got this very, very important initiative. I don't know if you want to cover this, Mark, related to Rise 2040.
For sure. We're doing 3 different webcasts around the world, really talking about the future of the profession and really setting the tone and the strategy out next 15 years. I know that sounds like a long time, but what are the hard trends, soft trends of the profession? And for all of our town hall members, you have the opportunity, if you could make this webcast, to be able to join in to the conversation and have your input, your thumbprint into what the future of the profession holds and how we're going to move forward together.
Lisa, we got some hot topics here, yes?
Yeah, so October has, as I mentioned earlier, Cybersecurity Awareness Month. We have a hot off the presses cybersecurity tool that I love the title. It's Risk, Response, and Remediation. So I think that pretty much covers the gamut of what we all need to be thinking about, especially as CPAs who have a lot of access to a lot of valuable information. So I highly encourage you to check out that resource. October is also a month where we focus on mental health and we have a new episode coming up in a brand new webcast series for emerging professionals. It is not just for emerging professionals, but we're trying to make sure that we are increasingly relevant to them. And this one is about work-life insights for emerging leaders. Highly recommend that you check that out. It is free for AICPA members and it is eligible for CPE. And of course, one of my favorite offerings is our Reimagining Your Tax Practice webcast, also coming up in October. And this is on burnout and mental well-being.
So I'll just quickly cover these final slides. Here's information about transforming your business model. Information here on how to register for this webcast series. Here's the remaining town halls. I mean, the year has got 5 more town halls. Some of us measure it, one every 2 weeks. So we look forward to closing out 2025 with you, bringing you the latest information and analysis that we have. And here's our different resources that we continue to work on and make available for you to best leverage all of the information that we provide. The rebroadcast of today's will be on Monday, October 13th. So that's it. Mark, great being with you here in New York.
Thanks for having me. Great to see everyone.
Lisa.
Thank you. Have a great October 15, everyone. And we'll be in touch.
Thank you.
Thank you for your participation. You can also subscribe to the AICPA Town Hall series on your favorite podcast platform, as well as watch archives on YouTube and find resources at cpa.com/townhall. Tune in for live broadcasts Thursdays at 3 p.m. Eastern Time.